The SEC formally authorized the DTCC to tokenize securities on a public blockchain. The institution that clears $4 quadrillion in trades every year chose Stellar as its network, and the legal protections attached to every security you have ever owned travel directly into the tokenized form. This is not a pilot program at the margins of the financial system. This is the financial system extending into new infrastructure with the same legal backstop it has always had. Had you heard anything about the SEC's role in this deal before today? Drop a yes or no in the comments right now. This is not financial advice. This content is for educational and informational purposes only. Always do your own research before making any financial decisions. If you find this kind of institutional analysis useful, hit the like button. It helps this reach more people who need to see it. Now let me walk you through exactly what happened and what it means for the thesis you have been holding. The Depository Trust and Clearing Corporation, most people call it the DTCC, is not a name that shows up in casual conversation. But if you have ever bought or sold a stock, a bond, a treasury bill, or a share of any major ETF through an American brokerage account, the DTCC was behind that transaction, making sure it settled correctly, making sure the ownership was recorded, making sure the legal protections attached to that security were intact. It is the post-trade infrastructure backbone of the United States capital markets. Its managing director described the organization's annual clearing volume as roughly $4 quadrillion in securities transactions. The depository subsidiary, known as the DTC, holds custody of securities valued at $114 trillion across more than 150 countries. This is not a peripheral institution. It is the central nervous system of global security settlement. And that institution, conservative by design, regulated at every level, built on 50 years of post-trade infrastructure, has now made a formal decision about public blockchain technology. The decision is Stellar. But this is the part almost nobody understands. The DTCC did not wake up one morning and decide to partner with a public blockchain. The legal foundation for this entire partnership was laid 6 months before anyone was talking about it publicly. In December 2025, the SEC issued a no-action letter to the DTC. In regulatory terms, a no-action letter means the SEC has reviewed a proposed course of action and confirmed it will not take enforcement action against the institution that proceeds. The SEC looked at the DTCC's plan to run a tokenization service for assets held in DTC custody and said this is permissible. Without that letter, none of what followed is legally possible within the American regulatory framework. That letter converted public blockchain tokenization of regulated American securities from a theoretical conversation into a structured, officially sanctioned 3-year program. Everything else in this story, the Stellar selection, the working group, the phased rollout timeline, rests on that foundation. Because once you understand that the SEC no action letter came in December 2025, months before any of this became public news, you realize the regulatory groundwork for this entire partnership was laid, while the market was focused entirely on something else. Now, let me walk through what the DTCC actually announced, because the details matter enormously, and most of the coverage compressed them into a single headline that misses the structural significance. The DTCC announced a formal partnership with the Stellar public blockchain to connect its tokenized security service to Stellar's network. Both organizations announced the deal jointly. DTC tokenized assets are expected to go live on Stellar's network in the first half of 2027. The 3-year pilot covers stocks in the Russell 1000, major index tracking ETFs, and U.S. Treasury bills, bonds, and notes. These are not speculative or exotic instruments. These are the foundational building blocks of conservative long-term investment strategies, the kinds of instruments that have appeared in retirement accounts for decades. And here is the sentence that most coverage moved past quickly, the one that deserves the most attention. According to the DTCC directly, DTC tokenized assets will carry the same investor protections, entitlements, and safeguards as traditionally held securities. Not comparable protections, not equivalent protections, the same ones. If you have spent decades building a portfolio of traditional securities and your hesitation about blockchain based assets has always come down to the question of legal backing, that sentence is the answer. The regulatory and legal architecture that protects your stock, your treasury note, your ETF share, that architecture travels with the asset into its tokenized form. And this is where the story becomes dangerous to dismiss. Now, let me explain how Stellar was actually selected, because this is where the story goes deeper than any of the initial coverage captured. The DTCC did not choose Stellar based on token price performance or the size of the community online. They applied a formal evaluation with 3 specific criteria: compliance minded architecture, open and configurable infrastructure, risk management capabilities. Stellar met all 3. The DTCC's managing director and global head of digital assets named the specific factors that determined the outcome: compliance emphasis, transaction throughput, and low cost operations. Those factors, she said, meet the DTCC's rigorous standards and are essential for handling the scale of real world asset transactions expected to grow on blockchain networks. Danelle Dixon, the CEO of the Stellar Development Foundation, said the network was built for institutional grade markets that need reliable rails, and this moment is what the Stellar network was built for. Real-world asset value on the network has reached $1.8 billion. The Stellar DeFi ecosystem holds $170 million in total value locked. Against the $114 trillion in DTCC custody, those numbers tell you exactly how early in the development arc this partnership begins. The institutional relationship is being established at the starting line, not the finish. Now, here is where things get serious for the working group. 4 names in the working group answer the scale question immediately: BlackRock, Goldman Sachs, JP Morgan, ONO Finance, and Ripple Prime. These are not symbolic participants. These institutions have access to every technology and every vendor in the market. They evaluated this program, sat through the discussions, and chose to be there. That fact carries weight independent of anything else in the announcement. The timeline is specific. Limited trading begins July 2026. Full commercial launch follows in October 2026. Tokenized assets go live on Stellar in the first half of 2027. Each of those gates requires the previous one to clear first. This is a phased schedule running under an SEC-authorized framework with named institutional participants at every stage. But this is the part almost nobody is connecting. Consider what this sequence means for someone who has spent 30 or 40 years building savings carefully. Equities, bonds, treasuries, a diversified portfolio held in a traditional brokerage account. The institution that has processed every one of those trades, that has held custody of those securities through decade after decade of market cycles, has chosen a public blockchain as the infrastructure for its tokenized service. The legal protections that have always accompanied those securities will accompany them in their tokenized form. That is not a development happening somewhere on the margin of the financial system you built your savings within. That is the financial system extending into a new infrastructure with the same legal backstop. Now, let me address the Ripple Prime element directly because people who have followed XRP will recognize that name and want to understand what it means in this context. Ripple Prime is listed in the DTCC working group. The connection between Ripple and DTCC infrastructure is not new. It exists through existing clearing and settlement relationships. What analysts who follow this closely have observed is that Stellar and Ripple Prime being in the same framework does not mean XLM and XRP are competing for the same function. The architecture being built appears to assign different roles to each. XLM is positioned in the token issuance layer, the infrastructure that represents and moves tokenized assets on the blockchain. XRP has been discussed in connection with settlement and liquidity functions, the layer that handles the actual movement of value between counterparties. Brad Garlinghouse has stated publicly that this will be a multi-chain world. The financial system is not going to run on a single network. It will use an interoperable stack, each network performing the function it is best suited for. And what Ripple also acquired, a company called Hidden Road, connects directly into DTCC clearing and netting infrastructure. Stellar is documented as both a derivative and a fork of Ripple. The two networks share deep historical roots. The observation being made by people who have tracked both organizations is that what we are watching is not a competition. It is a division of labor between two branches of the same original project, filling adjacent roles in a multi-trillion-dollar institutional stack. And what happens next changes everything for how you frame the investment thesis. WisdomTree, the asset management firm, has offered an analysis of what XRP and XLM actually represent from a portfolio perspective. Their view deserves attention because it cuts through the narrative confusion that surrounds these assets. XRP and Stellar should not be framed as rival monetary assets to Bitcoin. That framing misses the point of what these networks are. Their relevance is tied to adoption and usage. They are transaction networks optimized for cross-border value transfer and payment settlement. From a portfolio perspective, they represent different types of exposure than Bitcoin. Bitcoin is macro-sensitive and store of value oriented. XRP and XLM are flow-driven and utility-linked. Their relevance is tied to transaction volume, payment corridors, and actual network usage. WisdomTree added that in environments where Bitcoin consolidates, payment networks can still benefit from incremental adoption. They stated explicitly, this is not guaranteed. It is a framework for understanding what these assets are, not a prediction about what they will do. Now let me bring in the market reaction because it adds important context. XLM rose roughly 8% in the 24 hours following the news, outperforming a broader crypto market that was largely flat. At the time of the announcement, XLM carried a market capitalization of around $5.3 billion, ranking it as the 22nd largest cryptocurrency. In the week that followed, XLM was up 41%, and net inflows that had been around $4 million the day before the announcement climbed to over $13 million as the news spread. In Europe, 21 Shares operates an XLM exchange-traded product under the ticker XLME, available to European investors now. But there are no SEC-approved spot XLM ETFs in the United States today. At least one standalone spot XLM ETF is reportedly in the pipeline with plans to list on the NYSE or NASDAQ. Whether the DTCC partnership and the growing institutional legitimacy around Stellar accelerates that conversation is something to watch carefully. Now, here is where things get serious for the mathematical scenarios that have been circulating. There has been significant discussion about what various levels of DTCC activity on the Stellar network could mean for XLM's market value. Illustrative mathematical scenarios have been circulated, ranging from $100 billion in transacted value to the full $114 trillion figure, with corresponding estimates of what XLM might be worth at different adoption levels. These are mathematical exercises that show the scale of what is theoretically possible at various levels of adoption. They are not predictions, and they are not guaranteed outcomes. What drives network value over time is real economic activity on the network, real transactions, real settlement volume, real usage. The gap between $1.8 billion in current real-world asset value on Stellar and the trillions the DTCC holds in custody is real. So is the uncertainty about how much of it closes and on what timeline. The honest framework for thinking about the mathematical scenarios is this. The upper bound numbers require essentially all of the DTCC's custody assets to migrate to Stellar, which is not what the announcement describes. The announcement describes a structured 3-year pilot with specific eligible asset classes, a multi-chain strategy, and a phased rollout with institutional oversight at every stage. A more grounded read is that meaningful incremental adoption over the next 3 to 5 years, not the full $114 trillion in year one, is what the institutional logic suggests. And meaningful incremental adoption against the current $5.3 billion market cap of XLM, with the institutional relationships now formalized and the legal protections confirmed, represents a structurally different risk profile than what existed before December 2025. But this is the part almost nobody is sitting with. The pattern being described here is the same one that appears every time regulated institutional capital moves toward a new technology: extended evaluation, formal authorization, structured testing, phased rollout, then scale. The DTCC's evaluation of Stellar followed that sequence exactly. The SEC authorization provided the legal foundation in December 2025. The working group is running the structured testing phase right now. The timeline carries through 2027. The companion story, Ripple Prime and XRP running through the same framework, tells you this is not one network winning and others losing. It is a stack being assembled, Stellar in the issuance layer, XRP discussed in connection with settlement and liquidity, Bitcoin occupying a separate category entirely. Macro-sensitive, store-of-value-oriented, operating in a different use case from the payment and settlement infrastructure that XLM and XRP represent. And this is where the story becomes dangerous to underestimate. The Stellar Development Foundation has been building toward this alignment for over a decade. The compliance record, the institutional partnerships, the track record the DTCC cited in its selection. All of it was accumulated during years when the wider market was not paying close attention to Stellar. This announcement is the recognition of that work. For the investor who has been following these regulatory signals carefully, who saw the SEC no action letter when it arrived in December 2025, who tracked the DTCC's stated strategy of building across multiple networks, who held through periods when the conversation around these assets was skeptical. This announcement is validation, not of a price target. Validation of a thesis that was always about institutional infrastructure, not speculation. The regulatory groundwork was completed 6 months before the public announcement. The selection criteria were applied rigorously. The institutional participants in the working group chose to be there deliberately. The legal protections are confirmed and travel with the assets. The timeline is specific and phased. The multi-chain architecture is being built with XLM and XRP filling adjacent rather than competing roles. And the gap between where Stellar is today and what the DTCC partnership makes structurally possible over the next 3 to 5 years is the structural opportunity that the institutional players have been positioning for since December 2025. Now, here is where things get serious for the access question that remains open. The structural question that determines how accessible this development is to an ordinary American investor is the spot ETF question. There are no SEC approved spot XLM ETFs in the United States today. One is reportedly in the pipeline. Whether the DTCC partnership changes the calculus for that conversation is something to watch. But the absence of a U.S. spot product does not change the underlying institutional reality. The working group is running. The timeline is set. The legal protections are confirmed. The architecture is being assembled. And the people who understand what is being built before the U.S. spot product exists are the ones who will have had the opportunity to position before the product makes it accessible to the broader American retail audience. Step back and look at what has assembled here piece by piece. The SEC issued a formal no action letter in December 2025. That letter authorized a 3-year pilot for tokenizing securities held in DTCC custody, Russell 1000 stocks, major ETFs, U.S. Treasuries. The DTCC applied 3 specific criteria: compliance architecture, open infrastructure, risk management capabilities. Stellar passed all 3. BlackRock, Goldman Sachs, JP Morgan, ONO Finance, and Ripple Prime are in the working group. Limited trading begins July 2026. Full commercial launch is October 2026. Tokenized assets go live on Stellar in the first half of 2027. The investor protections that exist in traditional securities travel directly into the tokenized form. And Ripple Prime's presence in the same working group suggests XRP is filling the settlement and liquidity role while XLM handles the issuance layer. This is not coincidence. It is pattern. The pattern of regulated institutional capital moving toward a new technology in the only way it ever does: carefully, legally, methodically, and very much ahead of the public conversation. The architects of the global financial system are not picking a winner. They are building an interoperable stack, layer by layer, role by role, and the people who understood what each layer was being built for before the headlines arrived are the ones already positioned inside the architecture everyone else is still trying to read. Did anyone in your circle know about the SEC no action letter and its role in making this DTCC partnership possible? Drop your answer in the comments below. I am genuinely curious how many people watching understand how far back the regulatory groundwork goes. If this video gave you a clearer picture of what is actually happening, go ahead and like it. It helps this channel reach more people who need to see this. Subscribe so you do not miss the next one. Share this with someone in your circle who is only following domestic crypto news and has no idea what is happening globally. Stay informed, stay positioned. I will see you in the next video.